William Lee is a chief economist at the Milken Institute, and Jeff Ransdell, co-founder and managing director at Fuel Venture Capital. To you both, thank you for being here with us this morning as we wrap our heads around the latest bank fallout. Jeff, let me start with you. How are these recent events, the collapse of SVB, Signature Bank, now Credit Suisse, all interconnected? What's your level of concern in the global financial markets?
Well, it certainly isn't helpful, right? I mean, investors around the world are there's enough going on around the world as it is with war and interest rates and inflation. So this isn't actually the greatest thing in the world to happen. I would say that largely it's just people concerned, people starting to question things and pull back, right? And we haven't really had a bear market in 14 years. So for a lot of people, this is new to them, and when things are new, it's uncomfortable.
So, William, how would you answer the question that many people have right now, especially if they have their money in a mid or small level bank? Is my money safe? What is my bank doing to protect it?
I would say that for most people, your money is safe as long as you're within the FDIC limits of $250,000. Your assets are insured. For those who are putting in substantially more money, I would say part of your responsibility, if you're going to be putting a lot of money into an institution, is to know what that institution is doing with your money. Is the management really capable of doing the job? The last week has told us that there are a lot of cats and dogs out there, bad banks, where management is just not doing their requisite risk management job. Silicon Valley Bank is a classic example. And what's shocking is that the bad management practices got through the regulators. In the case of the Credit Suisse, it's been the black sheep of the global financial banks for years, with management dealing with fraud and corrupt governments and spy cases. So be careful out there. When you put your money in a bank, be careful that you know the quality of the management and what they're doing with your money.
Yeah, look at Credit Suisse and FIFA. Just Google the two things together, and I think that will align with much of what you're talking about. Jeff, will we see banks tightening credit right now? If people are looking to get a car loan, a loan on a house to buy a new house, will we see banks trying to prevent some of the things that we've seen in these recent failures from happening in their realm?
Well, again, I think it's really going to depend on the bank itself, and I think the comments that were just made are strong. I don't necessarily know that it will be the bank that is going to tighten things up. It's just the fact that interest rates are much higher now. It's more difficult to take out loans. It's certainly more expensive to take out loans, and that alone is going to curb that. I think that your traditional large banks like Bank of America and JP Morgan, et cetera, I really don't know that today is really any different than it was a week ago. Those are really big, large organizations that are highly scrutinized by regulators. And, I think those banks are operating as they were before. And as you were saying in your previous segment, there's a lot of assets that are flowing to the larger banks now from the smaller banks simply because they feel that they're safer. That is probably a correct movement and a correct thought process for those people to be doing so.
I want to get your thoughts, both of your thoughts on this. I spoke with former Senator Byron Dorgan on the program this week. He was one of the early voices in warning against financial deregulation, protections that were put in place after the Great Depression, the Glass-Steagall Act. He said were important safeguards, and repealing those led to the situation that we find ourselves in now. Would you agree that more regulation is necessary, even though banks don't want it? William, I'll start with you.
Actually, regulations and supervision is something that we feel, is something that's supposed to protect us. But we see in the case of the California regulators and the San Francisco Fed, they let by a lot of bad practices. So we can't put the responsibility of safety of our banking system only in the hands of our regulators. One of the messages that most investor professionals always tell people is do your due diligence, know what it is that you're investing in. And I think that's a message that really has to stand us strong now, because the resources given the regulators are getting smaller and smaller, and the legislation has really shifted the emphasis to the globally systemic banks, the big banks, because that's where most of the bank assets are. And And because of that, the smaller banks are getting less scrutiny. So you're right that we need to be careful when we go to the smaller banks, but small banks give us services that big banks don't give us. They're more personalized services. So if you want the personalized service, know who it is that's giving you that personalized service. Make sure that they're not taking out of one pocket what they're putting in the other pocket.
Right. In some small banks, you can email the president or the CEO directly. They'll respond to you on the weekend, right? Some of the benefits of that. Jeff, I'll give you the final word. Should commercial banking be kept separate from investment banking? You're in the venture capital world.
Yeah, I am in the venture capital world, and I spent 20 years in banking. So I'm going to jump with William. I'm not a fan of more, regulators making it more difficult for banks to do their jobs. I think, something that was also said in this segment is it's about the leadership of the banks themselves. And I think if anything, we need to put more ownership on those leaders, more accountability on those leaders. If you are the leader of a bank and you run that bank into the ground and you create the issues that you've created, you need to be held accountable. And that is one of the things that I think is potentially missing. But I don't think the answer is for the government to step in and make things more difficult for the leaders who are doing the job right, for the people that they serve, more difficult. That's not in the interest of the end consumer.
Thank you for watching. Go to newsnationnow.com to find NewsNation on your television provider. And don't forget to click the red subscribe button below to get more of NewsNation's fact-driven, unbiased coverage.